MTY Food Group. MTY, the ticker on Toronto Stock Exchange. We just got the data in yesterday, and actually they released their press release the day before. So kudos to Morningstar for getting the data in really quickly. Actually, they're normally pretty good, but sometimes not as good, and this was a good one for sure. Anyways, that's an aside. What do we think of the stock? Well, I don't think the quarter was good enough. And I didn't need Morningstar's actual data to come in. I could just read the press release, and I knew it wasn't going to be what we're looking for, unfortunately. We have supported this stock literally for 10 years until 2 quarters ago. And what happened there was organic growth hit a wall, and actually it was 0%. In financial parlance, organic growth means existing and not through acquisitions. Okay, so they really ramped up their acquisitions in the last few years. They always did them, but a little bit slower, a little bit more prudently. You know, they didn't have as many resources, so they were very careful and very good. I think they've gotten a bit too cavalier, in my opinion. They're buying anything, bigger ones, and paying up for them, paying up too much. So when you grow through acquisitions, I mean, simple face value thing, you're getting diluted. You're diluting your existing shareholders, right? You're bringing in other cash flow, and maybe that offsets it, but often not. You're paying more and then diluting your shareholders. So either your debt's got to go up, or if you do it with your stock, you just dilute your shareholders, and it can actually mess things up. I don't think they're quite in the mess it up phase, but I think they're being pretty cavalier in their acquisitions, and I'd like to see them just slow that down, get back onto organic growth. Show me some organic growth, and I will be back in this stock in a heartbeat. Like, in a heartbeat. I actually quite like the brands. I think they're pretty good, most of them. I mean, some of them are duds, I'm sure, but for the most part, I like the brands. You can see them, and especially if you're Canadian, you'll recognize a lot of these brands in the food courts. They do have international and U.S. operations. Let me just get some stats out of the press release. Okay, system sales were of $832 million. We're up 12%. So sounds great. Ooh, 12%. But remember, acquisition. I just said that, right? Okay. Same store sales, which is existing stores, nothing to do with acquisitions. We're only up 1.4% in Canada, 0.6% in the U.S., and down 9.2% internationally. That's bad. EBITDA total, including acquisitions, was up 1.2%. Okay, so right there, system sales were up 12%. EBITDA was up 1.2%. It should have automatically been up 12 for no dilution, right? That doesn't cover dilution. Just revenue and earnings and EBIT and cash flow should at least go up the same if you're making an acquisition, right? And then of course there's the price you pay for it, which comes into the dilution equation a bit more. But I mean, suffice it to say, really, revenue went up 12%, and EBITDA only went up 1.2%. That's not a good sign. Okay, second consecutive quarter with organic growth in EBITDA. Ooh, that sounds good. Until they say, which was 1%. 1%. 1% organic growth. This is a growth company. Come on, you can't just do it all through acquisitions. Give me a break. At least it's up 1. At least there's something moving. But it's not enough. Okay, let's just be real. It's not enough. It's not a complete disaster. The share price is down a little bit from 2 quarters ago. It came up way off. It actually crept back up a little bit. But it's not enough for me. I want to see some organic growth. Just give me some organic growth. Really. And I would be back in. I don't think the valuation's that crazy at the moment. But I'm not willing to stick my neck out. And who knows what next acquisition comes in and dilutes me even further. Right? So show me some organic growth and I'll be back.